axis lines. Oh, excellent. Well, they are extremely useful for our charts, as they act both as support and resistance many times in their life. They become very important areas for the chart in question. As we know, support can turn into resistance and resistance into support. Like during their life, or I should say the very nature of an axis line is that it provides both support and resistance many times, time and time again. Price revolves around this level and in turn provides ample trading opportunities, and obviously that we must take an interest in. So let's go to our study. Here we have an Axis intraday study, GBP futures, pound futures, intraday, 3-minute time frame. So we drive up, we have a small reaction, and we have a couple of touches. So as we break this higher, I will draw this level in. Okay, and then we see price struggle here and here. Okay, it's struggling to go higher, consequently we fall back down. What do we note? We get a good, strong, wide spread down bar. Gives the level validity. So as we try to come back up, it holds. We try to come back up again, it holds. Now we break through and we continue north to here, and this this move is climactic. You know, we rise too fast too soon. Buyers are unable to sustain this level of buying. The move is parabolic. You know, the move is vertical. Plus the close is off the highs. Okay, so we know there's supply. You know, odds favour a pullback or lower prices. So as we move back down, support holds and support holds, and we rally back up. Now, what do we notice about this rally? Well, we hold this level of resistance. We're unable to rally back up to the highs. From here, we drive back down, support holds, and come back down. And as we rally from here, I'm thinking now this level has got my attention. It's really caught my eye. You know, this level's been respected 1, 2, 3, 4, 5, 6, 7 times. You know, that's phenomenal. 7 times this level has been respected. Very, very important level for whatever reason for this market. Now, what do we notice about structure around this point? What do we notice? This level here, 1, 2, 3. We would draw this level in. As we get to about here, I would draw this level in. It's very important. What does this tell us? Well, we're making lower highs. High here, lower high, and at this point, a lower high. The resistant levels are becoming shorter. You know, there's a lack of demand, either you know, trying to drive the market up, or there's selling pressure. Either way, they are both signs of weakness, and we can see this from the structure. It's very interesting. This is very powerful analysis. Now we come up and we come back down again to S1. What's the significance? Well, support has been weakened. Look, we weaken support here and here. As we close under support on this bar, and then we try to rally, we only get to here before it's weakened again. We can't even drive to test resistance or this high. So this is telling me from price action at structure, the market is weak. Okay, so if we can, you know, lower highs, you know, we have this local level here, we're weakening support. It's kind of just, you know, the buys are struggling to hold the market up. Now we have something very important. This bar here. This is an incredible bull trap. Okay, it's a huge supply bar. I'm sorry you can't see it, but it closes just underneath, or right at this level. So what does this mean? Well, this bar encourages people to buy. Think of the psychology of the market. So they can see buying, and then it acts as resistance, and they've got good buying, and it acts as support. So there's buying, come down, buying, and then they go, oh, this level's holding. And then when they see this level break this high, or sort of break this high, or break this high, or if they're able, or if they're if they can read this ledge and they can see we're breaking into new highs, at some point this bar was closed like this. This encourages people to jump on board. There's fear of missing out. They've got FOMO. However, we can read the structure. The lower highs being made. And what's important about these lower highs being made? It's containing price. Okay, we are containing price with evidence of demand. The buying at support is weak. Then we rally back up and we slam down and we close mid bar, which indicates buying. Okay, but why is there buying here? Well, look over here. We're near support. So that is, I mean, don't get me wrong, this is a supply bar, but we would expect a bit of buying. Okay, how do you know that supply bar? We'll look at the spread of the bar as we break support. Apart from this bar, it's one of the largest bars we have since this big bar here. And that is significant. And if we look at this, if we consider this to be a trading range, all the down bars have the large spreads within the trading range. So this is going into more price action, which we will go into. But I just want to illustrate that this bar, although it does close off the lows, it is supply. It's a very wide spread, and we would expect a bit of demand to come in near this low. However, so we've got this bar here, okay? Then the next bar is like this. Then the next bar is very narrow. So demand, the buying is weak. And where are we? At newly formed resistance. This is the power of an axis line. We had support, resistance, support. So as we break, which is validated by this bar, we would expect this support to now turn into resistance. And that's an incredible 1, 2, 3, 4, 5, 6, 7, 8. So this is the 9th time. This should act as resistance, and it does, with very poor buying after a good drive down. When you can recognize this behavior in the market, and you can see a level has been respected or verified 7, 8 or 9 times, then we get a clean break and a weak rally with poor buying in comparison back to newly formed resistance, which should be resistance after it's been support because we have a valid break. These are very high odds trades. So by piecing it all together, we have an excellent opportunity. This is the importance of axis lines. They act as support and resistance multiple times. So naturally resistance holds here, and we break down to make lower lows. What's important about this action is now we have a confirmed downtrend. High, lower high, lower high, and now we're making lower lows. Okay, although we were making lower highs before and containing price, and we've got weakening, the subtlety here of just weakening support, okay, and then we've got no ability to rally. This is the move we wanted. This confirms all this weakness we see, the lower highs, container of price, climactic action, which we'll go into, no ability to rally, weakened demand, okay? this is exactly what we wanted to see. Okay, all this previous action here has hinted towards a break for lower prices, and look, the drive down is fantastic. It's the best move on the chart. Okay, anyhow, so the market finds support and we rally, here. What do we notice? Unable to test resistance here. That's weakness. We come down to S2. What do we notice? We spring. Doesn't go anywhere. Unsurprising. Why? Remember, springs in the downtrend are unfavorable as they are bullish setups, and we're in an area of supply. What I mean by this is, this is the breakdown area, what's driven us into new lows. So we've driven up, try to have a bullish setup with supply to the left. Failed spring, additional weakness, and consequently we make new lows. Then as we rally from here, we draw support across here. So as we come down here, as we rally to here and we start coming down, would I draw in this level? Well, you can do, but the axis line, as we have spoken about, this is where all the action has taken place. Okay, so if this went up here and we up thrusted, yes, we could take that trade. But I didn't add this level just for clarification purposes. So we rally from support, and as we rally from here, then I'll draw in support, and we get to what was once support here. We try to hold, should now be resistance, and it holds here and here. Excellent. Truly is amazing. And we come back down and we get a little spring, we come up and we're back at resistance. Now there is an additional piece of structure we should draw, and it's a local level of support. 1, 2, 3, 4, 5, 6 touches here. Okay, and we would draw this in. It contains price. Now using our logic, what should happen at resistance? What should happen when we get here? We react down. Okay, but we don't. We're holding. We would draw this in. Okay, why? Well, because we're holding a higher level of support, and yes, it does break down. And in next session we go into price action and bar analysis, and we can read the negativity. We can read as selling here, come down, more selling, more selling, more selling, try to go up, and then we get a top reversal followed by no demand. So we know by reading price action, okay, that this level is going to break, but we still need to draw it in. And we also get an opportunity. When we break down, we rally back. Okay, look at this. So as we break down, we have 2 bars here that give us an opportunity to make a play for our first target down here. And this is trading with the trend. Also, look at the price action. Lower high, lower high, lower high. When you can read the subtleties of the price action along, the lower highs, we're in a confirmed downtrend. We're making lower prices. Resistance is holding. Resistance is holding. It all becomes apparent. So when we break and we come back, it gives us a license to make a trade. Good. So the importance of this chart, or the main key, is the axis line. Okay. Support, we can see the market revolves around here, and when we break and we rally back, this was solid support, and now as we break and rally back, it gives us a license to take this trade. Okay, it should be very strong resistance, and the axis line, when we can read this and we understand it, we can take that trade. To the lowest point here is 100 ticks. It's a phenomenal trade for a 3-minute time frame. Not only the important part being the axis line, but it's the structure itself. From structure alone, we can see weakness. I know I keep on repeating myself, but I'm trying to drum into you the things that we look for. Lower highs being made, the containment of price, the subtlety of weakness, the subtlety of the support line weakening. Okay, we don't, and because we can see this subtlety weakening, because we can read all this, and we break here. We don't simply sell support. Okay, we wait for the rally. We wait for a rally back to a structural area. Don't forget, we lean against structure. And sometimes this doesn't occur, and you miss the trade. Okay, that's fine. That's just part of the game, it's part of the game. We wait. We wait for price to go back to an area of structure. Good. Good, yeah, that's this study completed. Are there any questions before we move on to the next chart? The last R, would you draw a local level of resistance? Last R, local level of resistance. Across here. Yes, you could do. How can I explain this? Like when we come up here, and we're pushing, we're not reacting. I like to look at little local levels, So when we come up, we're trying to push up and we hold. We want to be aware of that information. Okay. How can I explain this? Sorry. The resistance is directly above. Here we come up, and our main resistance is here, and I can see that this level, we have 1 touch, 2 touch, and then little violation. I mean, as we come down and break down here, yes, you can draw that in. Okay, but compare it to this over here. Because we're driving up and we're pushing our head against resistance and we can see it hold, okay, 5, 6 touches, it becomes significant. Okay, here we're coming up and our main resistance is very, very close. There is nothing wrong with drawing that line. Okay, and after time, you've been drawing structure for 4, 5, 6 weeks, it will become second nature, and you will learn what lines are important for your trading. You will learn you'll have an intuitive feel for the time frames you use and the markets you trade. You will know what works best for you. I'm here and I can teach you the principles and concepts, but we will use them differently. For example, I know 20, 30 other Wyckofian or VSA traders, and we all trade, a lot of us will trade springs and up thrusts and no demands. Okay, and we all have the same base knowledge. We all know the same principles and concepts, or some more advanced than others, yet we'd all trade our springs differently. The majority of our entry position will be different, yet our base knowledge is the same. Okay, and it's the same with the lines. You will intuitively know what works best for you, your markets, and the time frames the time frames you use. Your psychological makeup, again, your account size, your tolerance to risk, etc. All these factors come into play. But it's a very good question, and my answer. So yes, you can draw that in, and as we come down. You draw it in as we come down. I mean, look, it does hold here, but it's just so close to the resistance level. It's up to you. Ultimately, very good question. Got me thinking. Would you draw support from the 2 R's? These two are? The first 2 R's. The first two R's. Support. Would I draw support? Yes. This level. yeah, this level would be in. Would I draw it from the lows here? No, this is a good question. Would I draw it from the lows here? Okay. Or draw it from the low, or this low here, like we have. And if we carry it along, we can see. Well, see this again. This is where we need to use this. So it's very difficult to draw a straight line with the mouse, but this has two touches here. Okay, if we draw that along, okay, come across here. So if you're, this is a good example. If you're wondering what level the market respects, okay, if you don't know whether to draw this line here or this line, okay, you want to see price interact around it. So let's do a chart on. So this is number one, number two. Okay, we get a touch here that holds. So for number one, we can give it a plus. Okay, number two, and then as we come back down, it smashes through both of them. So price, it validates both levels. If that makes sense. Okay, then when we come back up, it pushes through this one, but one holds. So then as we come back down here, I would eradicate two. One would be the level to use. Why? Because it's been validated. Now think about this. We've held here. We drive through both, so they both get a plus. But then we drive through two here, but one holds. So as we come back down, okay, this one would be the level I would watch. I wouldn't watch this support here. And this also gives us a lovely opportunity to get in here if you can spot the reversal. Good question. It appears there aren't any further questions. Let's go on to the next axis study.